Hi there, welcome to Nepi Invest and welcome to the stock of the day, Ramelius Resources, a gold producing company on the ASX with a ticker code ASX. This is actually, or has been, one of my more favored gold producers. Unfortunately, the company did release a mine plan for Mount Magnet, and the market hasn't liked this mine plan. A little bit disappointing when it comes to production over the next few years. And the share price currently down about 14% for the company, 14.7%. So what I'll do is I'll just go through their mine plan and discuss why the market doesn't like it, and then we'll have a look at the chart. Is this an opportunity? Is this a buy the dip opportunity for this company? Because apart from this one day, the chart still looks okay. In fact, before today, it looked pretty good. Now it just looks okay. Okay, now on to their mine plan. Now, they did release two announcements today, maybe three. No, it was two. Mount Magnet mine plan update and extension, 57 pages long. And then also they released a presentation. I'm just focusing on the first one, update and extension. And it all comes back to forecasts, production or production forecast. And they do have a nice little graph just about here. Here it is, Mount Magnet mine plan. Now, in financial year 26 and financial year 27, their gold production plans, even the all-in sustaining costs, AISC, were a little bit worse than expected or lower than expected for gold production and a little bit higher than expected for all-in sustaining costs. And the market doesn't like that sort of thing. The market doesn't like when your forecasts are lower than their expectations, and that is exactly why the share price has dropped. For instance, their financial year 26 production guidance was 200,000 ounces, and consensus estimates was 225,000 ounces, so about 25,000 ounces below estimates. And even financial year 27, consensus estimates were that gold production would be around 185,000 ounces, and now they're forecasting 136,000 ounces, which is a little bit lower than expected. That's one of the main reasons why the share price is down. Now, in saying that, I did get a quote from the RBC Capital Markets analyst, Alex Barkley, who noted that as well as missing production forecasts, grade and output is also more back-ended than expected, with production peaking between financial year 23 or financial year 33 and 35. In fact, you can see that here. Not only is production expected to peak in another 8 years or so, all-in sustaining costs are expected to decrease during that period as well. In the meantime, production is expected to drop between financial year 27 and 32, and all-in sustaining costs are expected to rise. Unit costs are consequently broadly higher than expected, Barkley said, though the site life has been extended by 10 years, from financial year 34 up until financial year 44. So that is why the share price is down, because some of these forecasts in production and the all-in sustaining costs have disappointed the market. And when the market is disappointed, they're going to sell off. They're going to sell their shares. Anyway, so let's have a little chart for Ramelius. And I'll be honest with you, this chart looked pretty good. Looked pretty good until today. A beautiful uptrend. Now, what I've included here is the 25, 100-day, and 200-day moving averages. Typically, I just look at 25, 100, but sometimes I like to include the 200-day moving average, particularly in these darker times because the market is falling. Now, gold is down. We have seen a lot of pressure on gold stocks on the ASX. So another reason why the share price of Ramelius is down today is because of that. But the majority of the reason why the share price is down is because of this disappointing mine plan for Mount Magnet. Now, if you have a look at the weekly chart, this is something else I like to do. I have a look at the weekly chart for Ramelius. It's actually a really good weekly chart going back to 2014. In 2014, share price was struggling, about 10 cents. So share price has gone from 10 cents to 38. So if you've been in this company for about 10 years, you've actually done fairly well. Now, during that period, that 10-year period, of course, share price doesn't go up in a straight line. And we've seen periods where the share price has flouted, particularly between 2020 and 2023, when the share price dropped from about 240 all the way back down to 60 cents. So that's a 75% drop in share price in a fairly short period of time. But since that low of 60 cents in 2022, share price has done fairly well. It's gone from 60 cents back up to a high of $2.80. Now, if we turn our attention to the daily chart, no complaints here. until maybe today. Now, this sort of one-day candlestick can be a trend killer. Absolutely can be a trend killer, particularly if the share price is now at a long-term low. When I say long-term low, I'm talking about 3-month low or something like that. If you do see this sort of candlestick, and you do also see the share price at a 3-month low, 6-month low, that definitely can be a trend killer. Now, the share price was at these levels not that long ago. We're talking about a month and a half ago. So this is not a panic stations yet for Ramelius. In fact, I wouldn't be surprised to see the share price start to keep on going up, particularly if gold prices maintain their positive momentum. Up, 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 and up. Anyway, so that's all I have for Ramelius Resources. Stock of the day, share price down about 14% on a disappointing mine plan for Mount Margaret, in which they have fallen short of expectations, particularly in financial year 26, 27, and even for the next 8 or maybe 10 years. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.